ultimately, I think we're in a place where the response is going to be massively good for Bitcoin, right? We're going to have to cut rates. We're going to have to increase the money supply back to high single digits, maybe even low double digits. And in that world, one Bitcoin's one Bitcoin, but we don't price in Bitcoin, price in dollars. So the price is going to go up. In Web 1, we have 5, and Web 2, we have 5 protocols. We got TCP/IP, which you and I are using right now to talk. We have FTP to move files. We have HTTPS for websites. We have SMTP for email. And then we got www that ties it all together. I was like, well, in Web 3, are we going to have that same kind of 5? And is Bitcoin the base layer? And is Filecoin like FTP? And is Ethereum like www dot? But then it kind of breaks down. It's like, what's email? Is that Cosmos or Polkadot or Solana? I don't know. Maybe. And then people are like, no, we're going to have all these chains, all these L1s, and we're going to have links or bridges. But the bridges suck, and that's where all the exploits. Oh, but then Chainlink says, oh, well, we fixed that. Maybe. Okay. But I'm starting to lean to the one chain to rule all chains, like Bitcoin.
Bitcoin, Ethereum, and other exchange-traded crypto products have lost a total of $4.75 billion in 4 weeks, according to a new report from CoinShares. The category closed last week with $876 million in outflows. This is a marked improvement from the last week of February when cryptocurrency funds saw a $2.9 billion outflow. While this indicates a slowdown in the pace of outflows, investor sentiment remains bearish, wrote James Butterfill, head of research at CoinShares. It probably comes as no surprise that U.S. investors were the most bearish, withdrawing $922 million from cryptocurrency funds. President Donald Trump continues to wage a trade war with some of the country's largest trading partners, including Canada, Mexico, and China. Last week, the president also made good on his promise to create a national Bitcoin reserve and cryptocurrency stock, but in a way that appears to have disappointed many traders. Both macroeconomic factors have wreaked havoc on cryptocurrency markets. Things don't look so dire for traditional markets. Over the past month, ETF outflows have led to a 10% decline in total cumulative inflows, highlighting both investor doubts and the likelihood that many have already reached their desired cryptocurrency allocations. According to Mark Yusko, Bitcoin might become unstoppable. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now let's get back to Mark Yusko's view on Bitcoin and the overall crypto market.
The money supply has been growing at a truly astonishing rate for a very long time. And it's because of my generation, the boomers. The boomers create a bunch of entitlements. What's an entitlement? It's a promise you make to yourself that you don't fund, that you ask your kids to pay for. Who wouldn't vote for that? So the boomers voted for all these entitlements. And turns out the only way to get them was to issue lots and lots of debt. So we have this massive debt overhang, 36 trillion and rising. And then there's that T word again. So what does all that mean? Well, what that means is in order to service the debt, right, in order to create GDP when you have so much leverage, you have to increase the circulation of money. So money supply has grown about 8% since the creation of the Fed. And all this boils down to the difference between kind of real money, right? Money that doesn't devalue, and devaluing paper currencies, fiat currencies. So from 1776 to 1913, a dollar was worth a dollar. And this is why Bitcoin is so awesome, and how it all kind of comes back to macro and ultimately China, is one Bitcoin is one Bitcoin. Will always be one Bitcoin. One Bitcoin is one Bitcoin. So it's not about the Bitcoin. It's about the amount of currency, yen, euro, dollar, that keep getting devalued.
Bitcoin fell on Monday, March 10th, as price volatility in the world's largest cryptocurrency continued following an executive order signed by President Donald Trump to create a Bitcoin strategic reserve for the United States. Earlier on Monday, Bitcoin prices fell as much as 6.5% to trade around $80,650 before paring most of the losses. The reserve will be funded by coins that have been seized in criminal and civil forfeiture cases, and the U.S. government has no plans to purchase more Bitcoin. Following the announcement of the strategic reserve last Thursday, cryptocurrency prices fell as investors were disappointed that it was not a more aggressive program. However, some investors said the decision to establish a reserve was bullish for the long term. Matt Hogan, Chief Investment Officer at Bitwise Asset Management, said he absolutely believes the market is wrong. The market is disappointed in the short term because the government hasn't said it's going to start acquiring 100,000 or 200,000 bitcoins right away, he added. The reason this question is important is that it determines whether Bitcoin is worth $80,000 or $1 million per coin. Hogan called the drop in cryptocurrency prices a short-term setback. He believes the market will soon find its footing and realize that this is, in fact, inevitably bullish in the long run for the asset and for cryptocurrencies as a whole. Morgan Creek Capital CEO Mark Yusko shares his cryptocurrency predictions for 2025, including Bitcoin's growth potential and the outlook for altcoins. Yusko remains a staunch proponent of Bitcoin's 4-year cycle, despite the hype surrounding a potential implementation of a Bitcoin strategic reserve in the United States. He predicts that after reaching its fair value of around $100,000, Bitcoin will experience a parabolic rise, potentially taking it to 120 to 150,000 by mid-2025. He warned that a bear market could follow by the end of the year, warning, "We have another bear market starting in mid-2025. On Ether, Yusko expressed doubts about its long-term dominance. While the approval of Ether spot exchange-traded funds in 2024 was a milestone, Yusko questions Ethereum's competitive advantage. He asked, if Ethereum didn't exist and was invented today, would anyone use it? As faster, cheaper alternatives like Solana and Avalanche gain traction, Yusko argued that Ethereum's current market dominance may not be sustainable in the face of better technological solutions. He also expressed optimism about the future of crypto assets like XRP and Cardano in U.S. monetary policy. Yusko, who oversees over $3 billion worth of digital assets, expressed optimism in these cryptocurrencies would be included in the U.S. reserve assets under a Trump administration, in addition to Bitcoin. There is talk about the use and order of using XRP for a central bank, digital currency, or as a base layer for national banks. Yusko said, once a critic of XRP, he has joined a growing list of industry veterans who have recognized Ripple's utility in reshaping the financial landscape. Cardano's ADA was also highlighted in Yusko's vision. He praised the continued efforts of blockchain leaders to engage with U.S. policymakers. There's a lot of talk about them expanding beyond Bitcoin to include XRP and Cardano, he said, highlighting the budding collaboration between blockchain innovators and government officials. That said, if it materializes, the listing of XRP and ADA in the U.S. Reserve would mark a historic shift in monetary policy. XRP, often referred to as a bridge currency, is famous for enabling fast and cost-effective cross-border transactions. On the other hand, Cardano's proof-of-stake blockchain stands out for its focus on scalability, sustainability, and technological innovation. Meanwhile, Yusko's optimism comes amid rising tensions within the cryptocurrency community. In recent weeks, a rift has grown between the XRP and Bitcoin communities. Some Bitcoin proponents have accused Ripple's leadership, headed by CEO Brad Garlinghouse, of promoting a centralized financial system that contradicts Bitcoin's decentralized spirit. Ryan Selkis, founder of blockchain analytics firm Masari, has criticized Ripple, accusing the company of allegedly prioritizing political influence over crypto principles and calling it a threat to Donald Trump's proposed crypto agenda.